I've managed over the years to orange pill, I'd say quite a decent number of people. Last year in particular, I orange pilled over 9,000 people in my talks around the globe. I'm actually scheduled to be in something like 14 different cities over the balance of this year, talking the gospel of Bitcoin and financial freedom. I'm quite happy and pleased with some of those numbers, and we have direct ways of determine whether someone's been orange pilled. First of all, proof that they are actually hodling Bitcoin. I will tell you this, in all of my talks, in all of my travels, in all of my encounters, one of the number one things that comes up as a pause for people is Bitcoin's volatility. And for whatever reason, this holds back a great many people who actually even get to the place or point of believing that Bitcoin does really have an important role to take. Many can't seem to get past its wild volatility. As we all know, there are two types of volatility, right? There's upside volatility and there's downside volatility. So what many of these people don't understand is that Bitcoin, it has a volatility bias to the upside by 3-1. So that's the kind of volatility that you actually want in an asset. Volatility is vitality. You do not want death. A dead person is not volatile. A dead person is not volatile. A 95-year-old person in a wheelchair has very little vitality or volatility. But a 12-year-old, a 15-year-old is more rambunctious, more energetic, more vital, more volatile. You were more volatile at 15 years old than you probably are today. So volatility is not bad. It is a sign of life. It is a sign of vitality. And it's especially not bad if the volatility is skewed to the upside, as it is in Bitcoin. So remember this. This is a metric I want you to remember. Bitcoin's volatility is skewed to the upside by 3-1. Okay? So it is largely good volatility. So if downside volatility is bad and upside volatility is good, its upside volatility outpaces its downside volatility by 2-1, by 3-1. I've been a trader for 37 years professionally, 43 years if you count the idiot years, right? 6 of those years on Wall Street, and then I went to start my own trading firm and yada, yada, yada. And there are very few days over the last 37 years that I have not traded. I've traded virtually every single day of my life. And I happen to have a global trading team that spans 95 different countries today. But anyway, I tell you that to just add a little bit of credibility to what I'm about to say. In the trading world, professional traders at times refers to a metric called the Sortino ratio. Now you can Google this, you can look this up. It's called the Sortino ratio. So when we're looking for a stock, whether a stock is worthy to be traded frequently, regularly for daily, weekly gains, we will often look at the Sortino ratio. And what the Sortino ratio does is it measures basically good volatility versus bad volatility. So it will measure how much does this stock, let's say, go up for every unit it goes down in price. If this stock goes down by 1 unit, but when it goes up by 2 units, that's a very positive Sortino ratio. The reason why we as traders will look at a Sortino ratio, not because we want all of our stocks to have an upside bias. We don't. We want some to have a downside bias, but we want to know which ones have an upside bias and which ones that have negative Sortinos have a downside bias. So we know that this group of stocks should be primarily used to short. This group of stocks with very high Sortino ratios, you should not be shorting these most of the time. You should be going long most of the time. When something has a high Sortino ratio, it's basically telling you that it has an upside bias, that this is a type of thing where it's like pushing a beach ball underwater and it buoys to the upside more aggressively by 2 times or 3 times or 4 times or what have you. And so Bitcoin, as a financially tradable asset today, has a very high Sortino ratio, which means that it's like a hockey stick to the right, that for every downside unit, it has almost 2 upside units. So let me show you this. This came from Fidelity's report, and I will share one of the images from their report. I do read Fidelity's reports. I find them quite interesting, by the way. Well, this is from Bloomberg. The source is from Bloomberg, but it was in Fidelity's report, right? So shout out to both of those organizations. If you take a look at, we're measuring a period from February 2020 to February 2024. And you see that for this 4-year period, we're measuring Bitcoin against the S&P 500. And the CAGRs are just, it's wild. S&P 500 over this period had a CAGR of 13.6%. Bitcoin has had a CAGR of 58%. That is crazy. That is crazy high. Guys, there's nothing with a CAGR like this. And it's actually going to go up because this is incorporating the 76+% drawdown in Bitcoin's price in 2020. So as we move into 2025, you're going to see that CAGR go up and surpass 100, maybe even surpass 200, because Bitcoin's historical CAGR in the past is around 213%. But it does change depending upon where you measure the CAGR in Bitcoin cycle. All right. So when we measure in 2025, this will probably be near 200%. In the trading world, risk is defined by standard deviations, right? So basically, Bitcoin, when I tell you that Bitcoin is an 80 vol asset, this is what I'm referring to. I'm referring to a standard deviation measurement against Bitcoin's price. This is how you measure risk in anything. You measure it through its standard deviation. And so when I say Bitcoin has an 80 vol asset, I'm talking about its standard deviation. Well, it's coming down actually. So I can't legitimately tell you that Bitcoin is an 80 vol asset anymore. It's more like a 73 vol asset now, at least over the past 4 years. So its volatility is definitely dampening. Right now, Sharpe ratio is something that all of my traders use. They use it as a metric to improve and tighten up their trading. But it's the Sortino ratio that I want to draw your attention to, where what this is showing you is that Bitcoin is dramatically more volatile than the S&P, but for every unit of risk, Bitcoin is far more profitable. Bitcoin pays you more for every unit of risk than the S&P pays you for its unit of risks. So when I look at these Sortino rates, I would put everything into Bitcoin and not in the S&P, because I'm getting rewarded more for every unit of risk. The unit of risk for the S&P and the unit of risk for Bitcoin, they're equal, but I'm only paid 1.01 extra for taking the same unit of risk in the S&P. If I take the same unit of risk in Bitcoin, I'm paid 1.86. Why would I choose the S&P 500 if I am paid more for the same amount of risk, for the same unit of risk? This is how we judge in the professional trading world, using Sharpe ratio, standard deviations, and the Sortino ratio, what stocks to trade, what stocks should have an upside bias, what stocks should have a downside bias, which stocks are delivering more upside bias for my unit of risk, which stocks are delivering more downside bias for my unit of risk, and so forth and so on. And most people don't do this in their trading and that's why most people lose money. There's no method, there's no system, there's no approach, there's nothing applied to anything but let's check the news and and that's why we take money from these traders every single day. But we do rely on these metrics. And I wanted you to understand where I come from, why I tell you that it is stupid to short Bitcoin when Bitcoin has a Sortino ratio of 1.86. Like, you're fighting a Sortino ratio that over time is going to send you to the poorhouse as a short seller of Bitcoin. Right? You don't short something with a Sortino ratio of 1.86. You might get lucky once, you might get lucky twice, but if you do it long enough, I am telling you, you're going to lose everything that you own. All right? When you short something, you want an inverse Sortino ratio, where now the odds are so overwhelmingly in your favor that you can basically throw darts at a chart anytime and basically make money. But with Bitcoin, you don't want to be a net shorter. You're going to win because its upside is so like a hockey stick up and to the right with a Sortino ratio of 1.86 that the accumulator of Bitcoin during the downdrafts beats everybody. So buying on the red, when you have a Sortino ratio of bias to the upside of 1.86, the red bar buyer wins. The buyer in the bear market destroys everyone when that buying and accumulation is applied to a 1.86 Sortino ratio asset. All right. So very important. All right. Very important to understand that. Now, I want to show you something else from that report, which I found to be quite interesting. I will show you what I trade virtually every single day. This will be quite interesting for you. I believe it. I hope it will be. How do we know it's he really does that? This is also, I guess the source is Bloomberg, but it was embedded in Fidelity's report. And guys, if you want to see that report, it's fidelitydigitalassets.com, and just click on research and you'll see the report. This is the Mag 7, right? These are the 7 stocks basically that are the most traded stocks basically in history right now. Almost all of my traders have some mix of these stocks that we trade every single day. Now, my favorites are Tesla, Nvidia, Meta, and of course, I like Microsoft too. Now, Apple used to be my most traded stock for 20 years, but that's fallen off in the last two years or so, 2.5, 3 years. My personal focus, Meta, Nvidia, Tesla, and Microsoft. Now, I want you to take a look at where Bitcoin is in this 1 year volatility measure. This is measuring these things, the Magnificent Seven, the big tech Magnificent Seven, with Bitcoin in there, and showing you where Bitcoin falls in terms of volatility. So Meta, Nvidia, and Tesla actually rank higher in volatility than Bitcoin. I just believe that there are many people who actually over accentuate Bitcoin's volatility. It's volatile, but it's not as volatile as a lot of things out there. It's not as volatile as Tesla. It's not as volatile as Nvidia. It's not as volatile as Meta. And it certainly wasn't anywhere near as volatile as Amazon when I first got into it in 2003. That thing was extraordinarily volatile. I lived through 95% declines in Amazon with my long-term holdings of it. So Bitcoin sort of sits right in between there. Now, I don't trade Bitcoin. Bitcoin is my unit of account. I trade for Bitcoin. There are two types of market participants, right? Those who make deposits into the market and those who withdraw. Every day, my job is to withdraw funds from other people who've deposited into the market that don't know what they're doing, right? That's what traders do. All right. Successful traders don't deposit, we withdraw. So I go into the markets every day. I try to withdraw funds out of the market to purchase Bitcoin. All right. I am not trading Bitcoin to purchase dollars. That's stupid. I am trading Meta. I am trading Nvidia. I am trading Tesla. I am trading Microsoft virtually every single day to buy Bitcoin. So what I will do is I will take whatever I made that day in the markets. I will take 70%, 75% of it, buy Bitcoin with it, and the rest I live off of. That's what I do virtually every single day. So when you see me purchasing Bitcoin and I show you some of my purchases, I'm purchasing it with that. I spend my time on the right-hand side of this. I spend my time trading the Metas, the Nvidias, the Teslas to buy and accumulate Bitcoin daily, weekly, monthly, and so forth and so on. As far as I'm concerned, every day that I have more Bitcoin is a winning day. And especially if it's on a red day or down day, those are the best days. All right, so I just wanted to show you where Bitcoin fits in the volatility, the Magnificent Seven. So let me just show you this. Why don't I just show you what I did today? So see here, if I can share the screen. This is my trading platform. And so here, what you'll find is this is what I traded today. I don't know if you can see that. That's Microsoft, Tesla, and I did do an Apple trade today, right? As I mentioned, it used to be very popular trading stock for me, but it's fallen off in recent years. And here's my total for today. $5,772. What you saw me do, if you follow me on Twitter, you watched me purchase $3,500 in Bitcoin. And I do this every day. I take a portion of what I made on the day. This goes to Bitcoin. The rest goes to live. All right. And repeat, repeat, repeat. That I just wanted to show you. And it makes sense that I'm trading largely things that are as volatile or more volatile than Bitcoin to accumulate my Bitcoin. It's a very powerful combination. What else do I want to show you here? There's something else that I thought was really interesting. So what you see here is, again, 1 year volatility of Bitcoin versus other traditional assets. So you see bonds are obviously the lowest in terms of volatility. Gold is very low in volatility as well, right? So you don't have much of a Sortino ratio. You don't have much of a positive Sortino ratio there at all with gold. But now Bitcoin is off the charts as far as volatility in terms of asset classes. And this is the reason why I believe, and when people see metrics like this and charts like this, they get scared because of look at how volatile it is. And the assumption is that all volatility is bad when you have two types of volatility. You have good volatility, you have bad volatility, and you need to know what the Sortino ratio is of those two types of volatility. And as I mentioned, with Bitcoin having a 1.86 Sortino ratio, that's insane. That is freaking insane, guys, which means that you just buy, irrespective of volatility, because the volatility pays you. That's the good volatility, when the volatility pays you. When the vitality of an asset pays you, it is not a nemesis, it is not a problem, it's actually a freaking gift. And we should not want the volatility to go away, even though it's happening. I'm somewhat saddened by the fact that apparently right now, Bitcoin's volatility is gradually declining. I love volatility. I'm a freaking professional trader. I've been a professional trader for almost 4 decades. I make my money from volatility. I'm a little saddened that we're going from Bitcoin used to be a 200 vol asset, 200. Now we're 72 vol asset. Here it is. It's 73 vol asset, right? But it used to be 200. Before this cycle, it was like an 85 vol asset. Now it's a 73 vol asset. So the volatility is declining. I'm just a little bit sad, but that sadness is actually overwhelmed by something positive. And as Bitcoin's volatility dampens over time, guess what's going to happen? People are going to hodl more. You see, what prevents a lot of people from holding on is the volatility. When that volatility gets less, it becomes easier to hold, and the holding will get longer, which will create heightened levels of scarcity in an asset that's already the scarcest asset on planet Earth. This is going to create future supply crunches like you've never seen before. So even though I'm somewhat sad to see the dampening effect of volatility, and it's likely to continue when options get built on top of the ETFs and so forth and so on, that further derivatives further dampen volatility a little bit, right? It's just going to create a greater scarcity effect because it's going to be easier for people to hold on to it and live through the ups and downs of Bitcoin, making the scarcest asset on planet Earth even more scarce through self-custody. It's freaking crazy. It's mind-boggling when you think about this, guys. It's just wild. Now, the volatility historically of Bitcoin has served a very, very positive function by it being one of the main things that causes people to let go and loosen up. You see, in the beginning of Bitcoin's life, it was inevitable that small groups of people had massive chunks of Bitcoin. It was only a small handful of miners. They had massive chunks. But it's the volatility that would shake these massive chunks out of their hands into wider distributed hands. And so you need this early volatility to shake up these concentrated blocks of the supply. You don't want it centralized in a small number of hands. And so because of this volatility, because of every 4 years, it had a 90% drawdown, an 80% drawdown, an 85% drawdown, a 78% drawdown. Because of that, it became more distributed. Without those drawdowns, without that volatility, you'd have the majority of Bitcoin's 19.6 million Bitcoin in existence today in the hands of a small number of people. That's not cool. And so by design, you wanted Bitcoin to have early, excessive volatility to break up these concentrated holdings. Today, volatility serves as your litmus test. It serves as proof of how much you understand Bitcoin. If you allow the volatility of today to shake you out of it, to scare you, to frighten you, it means you have more work to do. It is a barometer for how orange pilled you are. It is the litmus test for whether you've crossed a threshold and can truly call yourself a true Bitcoiner. Because when you really go to the point of being a true Bitcoiner, you understand that Bitcoin in truth does not have volatility. You're looking at the volatility of the US dollar's opinion of Bitcoin. So the US dollar is simply an exchange rate for Bitcoin. So it's the dollar that's saying one Bitcoin is 63,000. It's the dollar that's saying, well, no, now it's 10,000. It's the dollar that's saying, no, well, now it's 73,000. It's the dollar that's saying, no, well, now it's 60,000. Bitcoin is the same. It's the dollars that can't make up its freaking mind. And so when you're accumulating Bitcoin as a true Bitcoiner, you don't really care what the dollar says. If the dollar says now it's 10,000, you say, okay, I'll exchange your bullshit for what is superior at 10,000 then. And then if the dollar says, well, okay, now it's 20,000. All right, I'm going to exchange you for the superior thing at 20,000. Oh, well, wait a minute. Now the dollar says it's 60,000. Okay, I'm going to earn you and change you for the superior thing at 60,000. You can show me any price you want to, US dollar. Whatever you show me, if I get you, I'm flipping you for the superior thing. I don't care where it is. I don't care what number you show me. I know one Bitcoin is one Bitcoin. I know that if I have more Bitcoin today than I had yesterday, I am bigger, I am wealthier, I am stronger, I am more powerful, especially in 2025, especially in 2029, and especially in 2033. So you can give me any number, US dollar, you want. Do you understand me? You can show me any number. I'm still changing your sorry ass for the superior thing. So go at it. That's the approach of a real Bitcoiner. You understand? That's the real approach. I don't care what the dollar says, because every fiat currency is going to tell you something. If you look at Bitcoin through the eyes of the Argentinian peso, it's going to give you a number. It's not going to be the same number as the dollar. And then you're going to put on the glasses of the Japanese yen, and the Japanese yen is going to say, well, no, Bitcoin's number is this. And the Turkish lira are going to say, no, Bitcoin's number is this. All of them have their own bullshit number. I don't care. If I get you, Turkish lira, I'm changing your sorry ass for Bitcoin. If I get you, Argentinian pesos, all right, boom, I'm changing your sorry ass for Bitcoin too. Wherever you say it is, I don't care. I'm changing you for it. All right. Oh, you want to give me US dollars? Okay. I'm changing US dollars for the superior thing. I don't care where it is. The number you show me does not have any influence on whether you're the inferior and Bitcoin is the superior. Nothing. No number you can show me has any influence on that. So show me any number you want. I'm swapping you there. As far as I'm concerned, your number, US dollar, is just an exchange rate, a rate at which to change your sorry ass for the superior thing. So show me any number you want. That's my approach, guys. That is what a true Bitcoin, that's the mindset of a true Bitcoiner. I like that saying. Went to work today, earned some bullshit currency, and bought Bitcoin with it after gas and food. I love it. Yeah. Okay. So there is something else I wanted to show you too, guys. I want to show you something else if I can. And what you see here is from Glassnode here. This is Bitcoin's life, right? So from $0 all the way to 100, close to 100,000, right? Where we are today. And that's the orange. Now, what you see in the red line is Bitcoin's 1 year realized volatility metric. So what you see, look at the peaks. The peaks are declining. So it was extraordinarily high in 2010, very, very still high in 2013, but a lot lower. Still high in 2017, 18, but a lot lower. Still high in 2021, but a lot lower. And look at where we are now. So volatility is, as the asset or as this beautiful thing becomes more adopted, its volatility will gradually wane, which will lead to a larger and larger adoption base. Pension funds, banks, all kinds of retirement funds, insurance company, it becomes more acceptable, which means that it will become more hodled, more held, more adopted. And this is going to happen. This is already the scarcest asset on earth. That hodling will make it more scarce. I told you today, sharing my 2 purchases today via Swan. They're not the only ones, they're just the ones via Swan. But I told you Bitcoin became more scarce today because the BTC that I bought today, you will never see that again. There is not a single human being on earth who will ever see that again. You will never see that Bitcoin again. It became more scarce. Do you think I'm the only one buying Bitcoin this way? Where I don't care what number, you want to bring this down to 1,000? Good. I will bring my average cost down so low that it'll make your head spin. You want to bring this down to $10? Good. I will bring my average cost all the way down close to $10. You want to take this to $1 million? Good. My point is that I'm not the only one who buys that way. I'm not the only one who never lets go of their Bitcoin. In fact, the Oliver Velez's of the world, they grow every day. Every day there's a new Oliver Velez who says, you know what, I'm not selling this. Sell it for what? Sell it for what? For all the other melting ice cubes out there? Sell it for to go back to the Argentinian peso? Or to go back to the Japanese yen? To go back to the US dollar that's lost 99.9% of its purchasing power since 1913 and 98% since 1971 and 65% since 2020? What? Go back to that? No, it's not going to happen. So the numbers of Oliver Velez's that buy and they realize this is growing every day. And so all these temporary moves to the downside do is make Bitcoin more scarce, which means it makes it more valuable for tomorrow. Bitcoin became more scarce today. My time became more scarce today too. That's very true. That's very true. We all have limited time. And in a very real sense, Bitcoin is time, But guys, what if, I don't want to wax too weird here, right? But what if Bitcoin is our immortality? Meaning that I've always had the dream to leave a legacy behind, right? For my family and for my bloodline. I wanted my children's children to just remember my name for having done the right thing to make their lives secure and free and independent. Even the kids not born yet. That's what a legacy is. And Bitcoin, better than anything, allows one to do that, to actually send their time, to extend their time into the future. If time is the stuff that your life is made up of, and Bitcoin is where you store that time. And this Bitcoin will be there 20 years, 50 years, 100 years, 200 years. You can literally extend your time into the future. It's truly a profound effect. And this has been done by the wealthy for ages, right? Names that have lived on long past their actual physical lives. Some have done it through buildings and wings of hospitals and libraries and trust funds that still are going on 100 years later, still supporting thousands of offspring, still as powerful as it was 100 years ago. Bitcoin gives us this ability to do this, to send our time into the future, to send the fruits of our labor into the future, knowing that it's absolutely secure, that no human being can touch it other than the ones you have left it with or for. It's very powerful, guys. Very powerful. All right. Oliver, why did you stop trading Apple? Why do you say that its nature has changed? Yes, Apple's nature has changed, and it's largely its Sharpe ratio and its Sortino ratio has changed. So it no longer offers that extra oomph for the risk that you take. It's still there, but I require a bit more, and Apple fell off. Now, I traded Apple virtually every single day of my life for 20 years. That's crazy. It lasted a long time. All right. And I've owned Apple as a core holding in my wealth portfolio since 1997. And I sold virtually all of my Apple at the end of 2020 and the beginning of 2021. You know what I did with it, right? Boom. Swap that shit right into Bitcoin. Absolutely. Would I recommend trading master MicroStrategy to put profits into Bitcoin? If trading is what you do, then yes, this is your job. This is what you do. There's nothing wrong with trading MicroStrategy. I think MicroStrategy is a great hedging vehicle. So what I will have my traders doing is using MicroStrategy to blunt the downdraft in Bitcoin. So as an example, MicroStrategy's volatility compared to Bitcoin is like 3-1, sometimes as high as 5-1. So this can be a very big positive, which means that Bitcoin goes up 100%. It's possible that MicroStrategy goes up as much as 300%, 400%, right? But it also works on the other side. If Bitcoin drops 30%, it's possible that MicroStrategy drops 50%, 60%, right? So with that, you can use MicroStrategy as a hedge. You'd never let go of your Bitcoin, but when you're in the bear market, you're playing MicroStrategy on the short side, offsetting the downdraft in your Bitcoin, more than offsetting by the gains you're potentially making in your hedge position on the MicroStrategy side. So that's very exciting. The ETFs can be used in a fashion that way, in that regard as well. And when options come, it's just going to be off the charts, guys. So there will be no bear market effect for us with these tools as professional market participants. We will wipe out the bear moves with these hedging moves. So it's very, very powerful. I'm excited. The future's bright. The future's bright, guys. Which comes first, hyperinflation or hyper Bitcoinization? I would say that we're going to have problems with inflation before there's hyper Bitcoinization. And you don't want hyper Bitcoinization to be rushed here, guys. I think it's a fallacy to want this to come too quickly. You don't want it to come too quickly. You want Bitcoinization to come to start off gradually for an extended period of time, and then suddenly down the line, You don't want the opportunity to run away from you before you really have enough. When I see someone who really wants Bitcoin to pump, why isn't it at 200 already? Why isn't it at 300,000 anymore? I know that person doesn't have a lot of Bitcoin. It might seem intuitive to think that, no, Oliver, that's why they wanted to pump. They have a lot of it. But no. The typical person that wants it to pump hard is the person that has a little bit of it. And the person with a little bit is not really in this as a freedom technology, a savings technology, a wealth building technology. They're in it for a fiat win. And so because of that, they just want more dollars. They want to hitch a ride on Bitcoin. And they're like, why isn't it going up yet? So that I can get my fiat dollars. That's the typical person that wants really fast and hard pumps, not the person who's a true believer and an accumulator. Because if this thing pumps too hard and you're buying $100 a week, what's your $100 a week going to do at 800,000? It's going to blunt your ability to really affect your children's future. So you don't want this running away from you so quickly. And I explained this before, and I'll end on this note. Everyone's always talking about the attack on Bitcoin being to the downside. This is nonsense. This is stupid to me. No attack on Bitcoin is going to be to the downside. No, the attack on Bitcoin is going to be on the upside. They're going to take this away from you by what? Making it easier for you to buy it? Dropping the price so that more people can afford it? Or is the best way to prevent you from really getting it is to take the price into the stratosphere so that now that it's only accessible to the true elite and wealthy? Which attack do you think is more effective? Crashing it so all you bozos can gobble up big amounts? Or to snatch it away from out of your hands and be like, oh, I can't access it anymore. It's way up there. The attack is on through things. ETFs being the gateway that stops you from getting the real thing, taking this so high in price, taking Bitcoin so high in price that the only way you will ever gain access is through me, BlackRock, or Fidelity, or Van Eck. It's too expensive for you to buy the real thing, but my ETF is $14 a share. My ETF is $35 a share. That's the attack. It is not to crash the price. It is to take the price so high that you never think that you can have access to it again, except through me. And I am telling you, no one can tell me that it is not more beneficial to own the real, authentic thing than to own a rendition of the thing. No one can tell me that owning a rendition of the Mona Lisa is just as good as owning the actual Mona Lisa. Bullshit. I don't buy that. And I hope you don't buy that either. So as long as you can get the real thing and get it in decent amounts, decent chunks, you do it, because this opportunity is going away. They're going to snatch this thing away from the masses, and they're going to be the gateway to it. Fake Bitcoin. Don't fall for it.